Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing mixed markets around the world this morning, with our futures up about 4 to 5 handles ahead of what should be an interesting week. Of course, we have the Twitter IPO coming up on Thursday, as well as some more earnings that continue to trickle in. So Scott, what kind of action are you expecting?
I think last week we saw some divergences, and I know myself, I brought down some risk, and I was trying to figure out what type of action can we get after 2 strong months. If you think about it, September, October, very, very strong, on top of what's been a strong year, let alone a few years. So as we get through the meat of the earnings and, basically up 24% or so for the year, you would think some corrective activity would be good. But as of now, we're only about 20 handles off that high last week.
So what are the levels that we need to know then?
Well, at this point, if you look at the chart of the SPX, you'll see that this is the trend that's been intact since the November lows. This was the accelerated trend that got broken once, and then just say, let's fast forward to this last little breakdown that we saw after that false high there, and that was about 4.5%. Okay, so from this move, you had your red dog reversal, you had your potent wide range bar to negate this descending channel, and then we hovered higher, broke through prior highs of 1729, and then extended to a high here of 1775. So with that being said, on Friday we reversed at the 8-day. We only hit the 8-day on the SPX, which strong markets do follow the 8-day, even though we'd love for sometimes a test of the 21-day. So the longer we stay now above 1752, the higher the anxiety level will be that we wind up taking out 1775 and continue to perhaps, I don't know, I guess at some point, if this melt up continues, we could see 1800 this year. If we were to open up 4 or 5 handles today, go red, break below this, then all of a sudden there is your 21-day and there's your prior high. So I think you need to be very, very selective here.
Right. Well, one of the biggest headlines of the week, of course, will be the Twitter IPO on Thursday. Do you have any idea on how you plan on handling it just yet?
I know exactly how I'm going to handle it. I'm not going to have any opinions, and I'm going to trade it like I've traded 100 or so IPOs where I measure the supply and demand. I'm not going to fully get into it because you'll see it later this show, but I think there's going to be a ton of opportunities the first day of trading and then thereafter, but there's a method on how, on how to figure that out.
All right, well, let's check the temperature then of the different sectors, because as you said, it's been pretty specific here. Let's start with the strongest. The Qs managed to hold the 8-day, so they're looking good.
Yes, you look at the Qs, you'll see that it was choppy last week. Some other groups went down to the 21-day or below it. This held the 8-day, which is a decent sign for traders. When technology holds the 8-day, we like when technology leads, so it held the 8-day. This is the low here, 82.40, above this per se, 83.48, and the Qs can continue to new 2013 highs.
And of course, we've been talking a lot about the consumer staples and how that group had led the rally, the recent rally, and it looked good on Friday too, managed to close above the 8-day as well.
Yes, and this had a big breakout earlier the week, and then it retested. So if you missed a breakout, you had a chance to maybe buy on Friday. You look here, this group's been very strong. Unfortunately, I'm not very familiar with a lot of names in this group, or I'm not very good at trading them. But anyway, here was your breakout. Here's your retest. Gets back above this little pivot here, and I don't see why this won't make new highs. But from where it was at the bottom of the channel all the way up, you had your breakout trade, 2 days up, a little bit of a retest. So now you could trade it versus 42.
And then meanwhile, the Russell, which had been stronger, had a sharp 3-day sell-off and drop below the 21-day on Friday. And this is a group that we often look to for clues about the markets. What does that tell you?
It tells you that you can't be too specific on these clues. You could trade them. I think some guys on Wednesday said, I'm getting short the Russell, I'm shorting the market. If you shorted the market, you didn't have that much success. But if you shorted the Russell, you look here at the IWM, it wasn't a blockbuster trade, but it engulfed this upper range, closed below the 8-day. So if 110.50 was your upper level pivot, which we talk about, you probably could have caught a cute little short down to this retest of this prior breakout. So at that point, hopefully you covered some. That low is 107.92. And the problem here is with something like this too, is like you look at the trend in the Russell, which has been really strong. You can go like this and draw from that November, going all the way up. So if you did get out here, okay, and that was your potential low, and it makes new highs. And that's what happened a lot of times over the course of this year, is you get out when it breaks an upper area, but you don't get back in on the pivot, and you miss new highs. So don't try and be too cute if you're a longer-term investor. But overall, it did break this area, now traded versus pivot.
We also like to look to the banks for clues about market direction, and the banks did have a 2-day pullback, but buyers stepped in on Friday to contain the damage, so that's a good sign.
Yeah, so we saw a small little red dog reversal. So a group that's been pretty much just lethargic. You know, people are like, how could the market continue to go up when the banks are making new highs? You know, every different part of this year had different characteristics. And in the first part of the year, we loved it, right? The banks were making new highs, tech was on the move. So, you know, I know for me, I like to trade the banks and tech, and you know, and while the refiners and some of the others were a little bit quiet with the ags. So now, without the banks making new highs, some people feel a little lost that they can't be long anything else, which isn't the case. But anyway, you look at the banks, you will see that you have this upper range, right? So you come in across, and it had this little false breakout right here. And then you had this small ascending channel, which gave a little bit of downside follow through. But then look where we held. Okay, we held right here. Reverse was, it showed out of performance on Friday. And you look lower, okay, which, you know, this part of the channel. So all in all, as lethargic as it's been, it's still in the top third of the range from the October low. So you can't always have what you want. So anyway, with that said, perhaps it gets back on the move, and if you know, you could trade versus this 2051 and pick some names within that group that you want to focus on.
We often talk about names like Goldman and Bank of America within that group. What are you seeing there with names like that?
Well, Goldman is acting pretty well, for these banks. If you look here, it's got a decently tight setup. It's in the middle end of this range, so you could almost draw like a nice little wedge smack in the middle. It's not the the best looking wedge, but anyway, so like there, and then it's tight here. So I would say for Goldman to act better, it's got to get above and stay above 163.35, and that should help the banks. JP Morgan actually finally had a potent day. It's still kind of in no man's land, but this green day matched the red, so maybe trade this versus 51.30. And like you mentioned, Bank of America, it's still just in this lethargic range here. Okay, this is the low. Here is your little descending channel here. It's acting a little bit weaker, I guess, with all the news that perhaps because they're heavily in mortgages, the settlements, this and that. So I would say in order for this to act better and get back in motion, it's going to have to close above 1432 with some type of volume.
All right, well, on the weaker side, of course, the home builders, we did see it get some attention recently, but couldn't hold on to gains, went all the way down to the 100-day on Friday. So this looks like it'll remain pretty weak for now. This
has been a frustrating trade for the second half of the year for most. First half, momentum, highs, higher, buying breakouts work. Now you have to be like a surgeon to try and make money, probably both ways. But if you look at it, it's still just ranging. And sometimes these ranges take a long time. Here's the bottom end of the range. Okay, and then I guess here you could draw a line like that. This is when it broke this minor wedge, and then it looked like it was going to hold higher. But that's what you do as an active trader. You measure why you're in this. Okay, if you were in this for a break of this ascending channel here, and you said, I'm going to stay with it, you're still in it. If you were in it for a break to the upside and said, I'm going to measure it versus upper level flag for maybe continuation, then you got stopped out when it broke below it at 31. Okay, so overall, you got a retest of this. So I would say really, for more intermediate guys, this 30 has to hold. If it starts to break below 30, you'll probably see some overall weakness in the market too.
All right, well, coming up, we're going to go in the trenches with some earnings that we have coming up this week. But first, a quick commercial break. We'll be right back.
I'm sure you've heard probably once or twice that Twitter is hitting the initial public offering market. My name is Scott Redler. Some know me as Red Dog. If you follow me on Twitter, at RedDogT3Live. With Twitter coming public, it could be one of the most exciting trading days of the year. You've heard everything about Facebook and how it came out the first day and it was a disaster. You've heard that LinkedIn was a success. You have to have a plan to know what to look for. Here at T3, we talk about the art of the first day of an initial public offering. We measure the supply and demand of that new issue when it hits the tape. Whether or not you should be involved in the first 5 minutes, 15 minutes, hour, or whether you have to wait. Let us help you sift through the noise here on our trading floor, within our virtual trading floor, because you're not going to find me on Twitter on Thursday and Friday. You're going to have to follow me here on the virtual trading floor because I'm not going to be on Twitter. Go to t3live.com, sign up for a 7-day free trial, tune in on IPO day, witness what those in our community see every single day. When Twitter comes public, I'd love to see you trading right next to me. Hope to see you there.
We're back and talking about some earnings that we have coming up this week. We've got Tesla reporting after the close on Tuesday. Scott, I know you don't typically take stocks into earnings, but would you consider doing some options here?
Yes, I probably will because the stock's been so good to us trading both ways, and I like the fact that it pulled off its high, so it's not like price for ultimate perfection, but it's still a little frothy. You know, I follow the trends in Tesla, and as long as it stayed above the 21-day like it did for almost 6 months, we were trying to be buyers of it. Recently, a little bit weaker, diverged from the markets. You know, I guess some people are a little concerned considering, you know, it has gone a long way. You look at the chart right now, you'll see here's that trend line from that quarter that ignited this move, came all the way up, and then right around here is when it changed, when the market made new highs and didn't. This was that stop right around 181, 182, and since then, it's come all the way to almost 100-day. So with that being said, it's at 162. You have the highs here at 194, so that's 30 points off the highs. So, you know, I'm not in it yet. I'm going to probably do some kind of either call strategy or call spread, but after hours, the way traders are probably going to treat it is they'll draw a line like this, starts getting above 180, maybe they'll nibble, and then if it were to get above and stay above the pivot high, you have a huge short float there. So, you know, maybe what you could do also is, you know, if you're looking at a call spread, that's how you use the resistance. You buy maybe the 170s and you sell the 190s. So this way, if it does get back to the highs, kind of like what Facebook did, you know, you could make some money on that move or trade it after hours. But we'll revisit this on the virtual trading floor a little closer to the report on Tuesday because there's a lot of time for a stock like Tesla in 2 trading days.
Right. Well, we also have Toyota reporting earnings during the trading session on Wednesday. Now, this was one of Scott's stock picks of the year for exposure to Japan. What will you be watching here?
Well, this was one of, I think, the 7-8 plays. I talked bullish on Japan, and then people are like, what kind of stocks? I'm like, I guess Toyota would be a good one. But look where that was. So you look at the chart here, Toyota back to start the year was down pre-80, or right around 80, 90. And I think, I'm not exactly sure what I remember what my target was, but it was probably somewhere into 100. So that was the move that took place in the first few months. And now look where it is at 130. So at this point, it's still held up pretty well. You know, if you're in it, I would not be in full amount of shares. And if you're trading it, I guess, you know, if you're going to do some kind of option strategy, it's got to get above 132, and then your pivot high here is 135. It is priced for perfection. You know, Ford came out with numbers and didn't act great. You know, some of the other ones, let's see what GM, you know, is kind of getting a little toppy here. So I would just be a little careful with Toyota, based on the fact that it's had such an enormous run from the time that we thought it was interesting below 90.
How about Disney reporting earnings on Thursday? Now, the stock recently made new highs on October 25th and has been resting above the 8-day, so looking pretty good heading into it.
Well, this one looks like a chosen one. People are very optimistic about this report. You look at the move Disney's had. It's, you know, from where it was to start the year, you know, and then it put in a nice channel going sideways, held the top half of it, broke out. We were looking for a breakout for this, and now it's flagging above that breakout. So what would be best is if they can give a trader a trade above 69.87 before numbers, so this way you don't have to have the earnings risk. If you're an investor in Disney and you've been there for multiple years, I'm not going to tell you what to do. You did better in it than I did, considering, you know, look at the move that Disney's had. You know, a great job if you're a stock picker. But back to the chart here, short term, here are your levels. This is your support, that's your new resistance. There could be a trade pre-earnings, and then we'll revisit it on Thursday.
Now, Groupon also reports earnings on Thursday, and this one's been stuck in a downtrend and did not get the same kind of attention that other social media stocks have gotten as of late. So what do you think heading into this report?
Well, this one, you know, I remember a few quarters ago, it came out with a number that ignited the move again, because this stock came from like low single digits, but it has pulled off the high, so I think there's an opportunity here. So if you look at the chart, you will see, you know, this is when it woke up. It woke up over the summer, right around there. I think that was on an earnings report. So it did peak, it's pulled in, so it's not priced for perfection. If you wanted to do some kind of play here, I would say do options, okay? And maybe get in there beforehand. You know, here's 9. Here, you know, you have a big, you know, spread between $9 and $12.50. So maybe, you know what? Maybe buy the 10s and sell the 12s. And I'm not exactly sure what that call spread, you know, your cost to what you can make, but I'll look at that a little bit later this year, you know, this week. But it did close strong. This was your first signal to, you know, buy for maybe a pre-earnings run. And if it does, you know, maybe you can even catch some cash flow before the earnings, which comes into about 10.50, 10.70.
All right, well, it's time for some quick hits. Let's run through some stocks that have reported earnings recently. Apple, for one, has been trying to hold in pretty well, has been holding higher.
Yes, and, you know, from the prior quarter, it was at 420, you know, that quarter. So going into this report around 530, $100 higher. The report was solid, so it just needed time. So the question is, did it have enough time? And if you look here at the chart, you will see, this has been very good to us since 2 quarters ago. And that gap up where it held, you had a quick move, a retest, and then it went again. So overall, it's trying to work off the just say the ugliness, because this is an ugly candle. It broke above 532 and then failed. So what does it do now? It's holding 515. I would say watch this develop. If it stays above 515, maybe be in a feeler or a tier 1. And then if it starts to get above this 527 and closes above it, then I think it's acting better, and then the next objective will be this high here. So overall, nice few days of consolidation to burn off this candle, to burn off this recent move. So it's on the B+ list, not the A list yet.
All right, what about Google and Amazon? I mean, the earnings, as we said, have been very stock specific. What do you see here?
Well, Google, I think, is something that's tighter, and it's been holding up better. You look at Google, we had a nice options play into earnings. Then it actually even gave us another nice trade right here when it traded above this 1,019. And now it's looking like it's hovering again in the top third of this range. So if the market wants to be strong and it wants to continue, this is a candidate, and 1,041 is that pivot. I still have a call spread, so we'll see what happens going into the end of the week. And then there's some decent trades here. So see if another one develops. As far as Amazon's always trickier. And because obviously people are worried about the valuation and the lack of earnings, but it still goes up anyway, whatever. So it did have a potent day on Friday. So see if it leads into another. It's probably up a little bit with the futures. If it goes red, some probably will try and short it below 356. And then if it were to get a close below 352.62, you do have a decent sized gap here. But overall, I still think it looks okay. It still is a big earnings gap. It's just a very choppy stock of late to trade.
All right, how about gold? Gold has already given back most of its recent gains and has dropped below all key moving averages. Still not getting that new bull market in gold. No. You're lucky to get a trade that sticks, where you could buy higher and sell higher for about 30 seconds. Anyway, it's not really that much of a I would say, what would be a good word here, Brittany? A surprise. Oh, that was a tough one. Whereas, it's been 2013. This whole metal's been in such a downtrend that every time it does look good, it fails. And you could look back here. This actually starts well even before then. Okay, where we talked about the intermediate trend that broke right here with this symmetrical triangle, and then when macro support broke right here. So there was a chance that, you had this inverted head and shoulders pattern, when the blood in the street lows came, but you still had to be skeptical, because downtrends are downtrends until you get real power. And right here looked like it could have went again and then reversed on Fed Day, so that was your way out. So short term, which is the only way to really go about this, I guess, is now you could trade versus this 126.05 and see if maybe it retraces back. But again, not really much to get excited about. Well, then on the flip side, the TBTs had a nice gain on Friday of about 2%. If you remember Scott's 2013 thesis of going long the TBTs, looks like that theme remains intact. Well, it's also how you go about it. If you bought it in the first few months of the year and said, I'm just going to hold it, that's one thing. If you said, I'm going to trade intermediate trends and look for spots when technically it looks worse or better, you look here at the TBTs, you will see there are two spots to really look at as of late. Okay, first thing, the beginning of the year it ignited right here and you had an enormous move. Another nice trade was when it broke above 70 and held, and then it followed this trend line. Okay, and if you trade on an intermediate time frame, you could have easily got out right around 78.50 and said, I'm going to wait to see another signal. It did come in and retest this area, and then finally you saw a decent day. So if you got stopped out up here, which it could have been, first this was the upper level area that, for real super active traders could have seen, and then this was your confirmation of that break right there with the lower high. But anyway, I would say at this point, if you wanted to nibble on any weakness versus 72, I think it makes sense. There's another trend here that you'll be able to trade against. I think that, tapering, they're not talking about it until maybe March. It does seem like people kind of believe it could be sooner. There's a whole fight amongst all the Fed officials, which I'm not going to get into, but I'm hoping that they start sometime in March. And they might, because typically if the market stays strong and we get the new flows in the new year and they continue this rally into the first month or so of January, and we're at 1,800 plus in the S&P, I find it very hard that they're not going to start reducing the pace of purchase, even though their mandate is supposed to only be unemployment as well as some other things, right, not higher prices in the stock market. Right. Well, so what do you think you'll be focusing on today as you begin the trading session? I just want to see if today's gap up holds. Maybe some flows go back into the banks. I want to look at those earnings plays and see if anything is going to get back in motion and had enough time. I'm not super excited about many things. I know last week, I made some money in some one-offs like JCPenney's. JCPenney
You know, we talk about trash for treasures trade, where if you're still long from 22 or further, this is in your trash bin, but it became a treasure as it started to act better and ignited right here. I still think that this potentially could work its way back to this point. All in all, you know, up 10, 12% for last week is a start. I might even shop there a little bit just because it was so good to us last week. But anyway, you know, then you have another kind of one-off trade, which is not a leadership stock, not crazy, but like a setup. You look at Walter. Guys have been looking for this on my community for a while. And then finally, Walter had a wide range bar above this area, closed pretty strong. It could see, you know, a lot higher prices. This too has been battered and bruised and is just starting to wake up. So I think the moral of the story is, you know, kind of love them and leave them. You know, back in the old days. No, I'm kidding, I never did that. But just, you know, don't stay too long. You know, even from the short side. If you're looking for a cute short, take a cute short. If you're looking to play select plays, play them. If you're married to things longer term and you're like, I want to be it for 3 more years, then don't worry if they break the 8 and 21 day. So this is one of those weeks where it'll be interesting to see if that 20 handle pull-in off the highs is the correction, or do we see some lower prices?
Right. Specific trades, specific action, but obviously specific things to do as well.
There you go.
There you go. Well, with that said, happy trading, everybody. Have a great Monday.